Welcome back. As we continue to digest Canada's latest jobs data, let's get an investor reaction to those numbers. And we're joined now by Kelsey Keane, Director of Equity Capital Markets at the National Bank of Canada, joining us in studio. It's good to have you in. Thanks so much.
Pleasure to be here.
So I'm wondering, as you probably heard Travis O'Rourke just talking about how you can look at these numbers that were released today and you can look at the positives or the negatives because there's so many differences in them. What are you looking at? What's your takeaway?
Yeah, so as you mentioned, the composition of the data isn't as bad as the headline number looks. There were positive gains in full-time employment, which is strong data. I think investors will be looking at how does central bank policy react to this data? And what's really interesting is they're going to have to decipher between some of the structural changes in the economy. So that's tariffs, that's a slowing growth in population in Canada. And differentiate that between cyclical changes.
So what do you think they will do? Because obviously the labor market is a huge factor into what the Bank of Canada decides to do with rates.
Yeah, right now the outlook is still to remain stable in the near term. And I think it will be very data dependent. There's a lot of economic data to come out before the next meeting on March 18th and further on throughout the year.
You say too, the silver lining was full-time jobs are up because we're seeing full-time jobs up, part-time jobs down. Some analysts are saying that's just noise. Do you think that's actually something we should focus on, especially the part-time aspect of it? Yeah,
and once again, I think the takeaway there is positive. I think full-time is really the heart of the employment number. I think part-time, that's, once again, it's employers' confidence around everything that's happening around trade negotiations and just the broader economy in general.
Okay, so let's move on. There's exciting developments in Canadian IPO today. AGT Foods announcing that it is going to go public again.
Yes.
What do you make of this? I mean, they say, they can raise $336 million in an initial public offering. Do you think that's realistic?
So they filed their prospectus yesterday. It's actually for a $460 million IPO. Oh. So, yeah, you know what? It's really interesting. I think we should look at the backdrop of what's been happening in Canadian IPO markets over the last 3 years. We've seen over $100 billion of small cap Canadian companies get taken private. And that's actually shrunk the small cap sector. And it's made it harder for small cap Canadian investors to have a place to build a strong portfolio within these markets. So when we see a strong Canadian name like AGT Foods looking to list publicly, I think that's a really exciting development in the market.
They were taken private, though, I'm not sure how many years ago. What was there a benefit of being taken private, do you think, for this company?
Yeah, so I think being a public company, there's a lot of scrutiny. So there's quarterly reporting, and you're constantly under the watch of the market. So I think when companies look to go private, I think there's a couple things happening. For the buyer, they're looking probably at a company that they see more inherent value in, and an opportunity to buy that and then potentially monetize in the future. And then the other thing is, it gives a company under being private more time to recalibrate and build up a strong, resilient business.
And then go public again. Okay, let's look at the markets now and talk about what we're seeing with the markets today. It's been an interesting week for North American markets, right? It's a lot of volatility out there. In terms of what we're seeing today, the TSX is up, US markets seem to be going up again. What do you make of why we're seeing that kind of resilience today, I guess?
Yeah, so it definitely a rough start to the week.
Yes.
We saw a big rout in tech and the materials sector. So I think it's, by the end of the week here, I think investors are looking at maybe some of the sell-off as being a bit overdone. During the week, too, we did see a lot of sector rotation. So we saw, the sell-off in tech and materials and more investing into consumer staples, consumer discretionary. And a lot of that was just the shift in the risk-off tone. So I think today we're looking at kind of a stabilization in what those outlooks are.
How do you think investors should look at that, though? It's hard to predict the future, especially now, but are we in for a bit of more volatility moving forward? Where should investors look for a little bit of a safer bet?
Yeah, so, exactly what we talked about. There's certain things, certain areas of the market where you can look. So more of those staples, utilities, those are great places to put your money. Also, fixed income is another place that people look to put their money. I think we can expect volatility, just everything we have going on geopolitically. But still, what's interesting, I would point to the volatility index. I mean, it's been relatively stable, even amid all the economic changes and all the news that we've been getting over the last, more than just the last year. But so that shows that there is an underlying strength that investors do want to keep their money.
Right. Okay. We will leave it there, but I appreciate you coming in studio. Thanks so much for joining us today.
Thank you.
That was Kelsey Keane, Director of Equity Capital Markets at National Bank of Canada.